It's okay.
I was the ugly one.
Welcome to Muck and Greg talking the markets here, guys. I have Muck Bear Pig and Greg Gamba. Greg's camera, it started off working perfectly, and now it's become this cracked screen.
Yeah, sorry guys.
But that doesn't impact the substance that he has to say. Guys, we've been dealing with some crazy markets for day traders, for people that trade regularly, not people that look at just closing prices. It's been tremendously interesting. I've been very active. I have an empty milk gallon bottle here next to me, just in case I have to go to the bathroom. But anyway, that being said, let's move it over to the two men and let them tell you what they see and what they're doing. Muck, why don't you go first?
All right. Well, what I did yesterday was we actually first bought Apple at 96 with a thesis on it that I'm fine if it goes down to 85. I initially wanted to buy it at 97, and before I could set stuff up to buy it at 97, it had blown by that price. So, in my book, if it blows by the price that I want to buy it at, I'm still buying it anyways because I like it. I just get to buy it cheaper than where I originally wanted to. So we're starting to build a position in Apple. We're already built and done with a position in AT&T, so that's where we're at. Altogether, roughly at 33.27, and looking to hold that for a long time. As everyone knows, I've been quite bearish, but not bearish for the long term, just bearish. I thought prices were high, so I wasn't really adding to anything up now, but I have been, looking to buy and buying. I thought yesterday gave you a great opportunity to go into today short. If you went into today short, great job. You're amazing. I hope you covered around, down 100, down 150.
Yeah, right.
But to think that we were going to hit triggers or hit some kind of breaks or some of that today was, I think, overrated. I think maybe you got too optimistic, and it would not surprise me to see us close green today.
Yeah, I mean that's kind of where my head's at. So just to kind of fill everyone in, I started off the week. Well, I started off last Friday, long a whole bunch of Baidu 212.5 calls for this week's expiration. I ended up holding through the entire week. I rolled 3/4 of my position into next week's 210 calls. And, I mean, I had a great opportunity to get out Friday. I had another great opportunity to get out of the 212.5s today. And I'm holding on just because I want to see what happens at the end of the day. So, I mean, Bob, you and I talked about this earlier. We've been conditioned now to know, all right, first half of the day we're going to rally, and then right around lunch you can get your shorts in, everything's going to fall off, and then obviously the second half of the day we end up going through the lows and kind of just crapping out from there. Today, I really don't see that happening. I think right now, with the market where it is currently, we're seeing people trying to set that trade up. Obviously, we're starting to dip a little bit here. I don't think that's going to work today. I agree with Muck. I think we're going to end up green at some point. Whether we close green or not doesn't really matter to me. I just kind of want to see us get back to within that 190, and then obviously I want to see 200 in coming weeks or whatever. But, I mean, long term, we talked about it last week. I love these Chinese ADRs. They held up tremendously compared to the rest of the market over the past week. So I was really impressed there.
Hey, Greg, could you go over those ones that you're looking at again for people that didn't see last week?
So obviously I'm looking at Baidu, and I'm also looking at Yoku. Yoku has gotten the crap kicked out of it. And where most probably look at it and say, all right, well, I want to short this to zero, I'm looking at it and saying by January 2016, this thing is going to be back over 25 bucks. I think, like I said last week, just to catch everyone up, the Chinese economy has gotten a ton of bad press. There's a lot of questions as to whether or not these giant retail chains are still getting their manufacturing done there, if production's going to slow down, whatever the case may be. I I kind of laid out last week why I don't think that's the case. But just again, we're seeing a ton of money getting thrown around with endorsements from these manufacturers like Nike, Adidas, Under Armour, and I don't think they'd be doing that if they weren't justified as far as what they think they're going to be able to sell, right? So I think China is much better off than we're giving it credit for being. I think it provides an excellent value buy right now, especially after this big dump. And then, I mean, just from trading opportunities, Baidu has been one of the best names to trade over the past month and a half. So,
Hey, Greg, I'd just like to kind of get maybe a little bit of your macro thoughts on China in general. I mean, you know, it's kind of widely assumed that their GDP numbers are a little bit of bullshit, and that they put a little smoke in them. I think the Australian economy, if you follow currencies at all, what's going on in Australia indicates that China is slowing. But what you're posturing is that these companies, that there's value in them. Now, what impact, what if any impact, do you think that the overall Chinese economy may play on these issues?
all right. Well, first, I mean, just kind of to address the main issue, all these GDP numbers are fluff. They're all inflated one way or another. I don't think we'll ever truly get a legitimate number, but I guess I'm just cynical in that nature. As far as the economy on Baidu and Yoku, have I seen it been? Listen, I've seen them get hit in recent weeks with the headline risk, and obviously, being that I like them to the upside, I was kind of concerned about that. But I think what we're seeing is we're seeing a number of bigger firms posturing themselves within these two specific names, most notably, obviously, the Baidu, which got upgraded this morning. I think we're
Who gave that upgrade? I'm sorry.
Oppenheimer.
Okay.
Wait, hold on. Yeah, Oppenheimer gave them an update, and then the month before they got updated by UBS, and they got they got updated by BNP Paribas. So, just me personally, I think everything's kind of coming to a tipping point, and we're going to start seeing these big Chinese names that have gotten beaten up kind of have their moment in the sun. The economy at large, though, listen, I'm going to be honest, whether it's contracting, expanding, or staying stagnant, it doesn't really matter to me.
Okay.
I think that we're still going to see China being a huge player on a global scale. I think we're going to see them spending money, and like I said, I think there's a tremendous amount of upside to some of the names within that sector.
Very fair comment. No, I mean, I can't disagree with you. I mean, I know that there was some news that was out late last week about that China had finally surpassed, under some measure, the U.S. economy. I don't know whether that's the case. Obviously, they have about 3 times the number of people there. And, you know, long term, there are some issues, I think, relative to the political situation, but the premier seems to be in charge of that. I don't think it changes fundamental stories for some of these underlying companies. I mean, clearly, somebody's going to be making money in China. That's for sure. Muck,
Yeah.
any thoughts? I'm
Yeah.
sorry.
No, go ahead. I'm fine.
Uh, Muck, where else are you looking? What else you think?
Um, I think you know, beat a dead horse, but I still like some industrial plays. Um, I like I like companies that I know will earn legitimate money. Not to say that companies earn illegitimate money, but a lot of companies aren't. They're not focused on, you know, they'll dilute the earnings per share with buybacks, and I get it because you can borrow super cheap now. Why not buy back your own share and up your stock price? That's fine and well. But I want to see companies investing in themselves. I like that. I like companies that look like they want to grow. I'm still very much afraid of the Netflixes, the Amazons, the Teslas and stuff like that. Uh, you know, if Netflix was Caterpillar, or if Netflix was 3M or something like that, I could see their stock rallying today instead of getting hit 100 points. That's the problem when your revenue and your profits and stuff like that mean nothing, but all it matters is how many people are using your stuff or how many new subscribers you constantly get. That is where in my opinion, the problem lies, and I don't want to own anything for that.
All right. So if I may, what's more important to you, Muck? Seeing a company investing in itself, or seeing people investing in the company?
Well, I would like to see both. That's kind of a chicken and an egg. That's kind of a chicken and an egg question. But but I mean, what I'm essentially saying is that if you want to go with the high flying and the cool stuff and see your portfolio soar, 100, 200%, that's great. But then please be prepared to take it in the face.
Yeah, but you don't buy them at 400.
You buy them at $1? You buy them when they IPO and you just expect them to go through the roof? Because that's, I mean, I'm sorry, that's hope and prayer, and I don't play that game.
Icon wanted Netflix before Netflix went to 70. But why did
but Tilson was in Netflix way before Icon talking it up. But Tilson also got crushed on Netflix's short. I'm just saying, when it comes to stocks like that, you could write it up as easily as you could write it down, and that writing it down is gonna hurt, because I guarantee if you're writing it up, you're not selling, and you should be. You should be, every time it breaks 100 points, you should be selling a quarter of it.
I mean, all right, that's justifiable.
But I guarantee people weren't, and so it was at 500, and it just got its head lopped off today. I think
the other side of it is these funds. Come on, let's be realistic. They definitely hedge their risk. So even if they were buying up at, we'll say 350, 400, whatever price you want, it's not like they're naked. They're out, with their pants down around their ankles, getting beat up.
I'm not really talking about giant funds. Giant funds don't watch this show. I'm talking to the people who watch this show. And saying, just be smart. But giant funds book profits a lot more than anybody else would, because they have a ridiculous amount of people to.
They also have a fiduciary responsibility to do so.
Yeah, indeed. And that's why they can take risks.
If you're legally obliged to take profits, then it kind of changes the scheme of the game. Right? It's a completely different psyche, as opposed to me owning 100,000 shares of Netflix at $70 and now looking at it at 400 and something. It's a completely different game. I don't have to take the money out because it's mine, as opposed to these funds that are simply just representing private parties in the market that don't really want to be exposed.
Yeah, you don't have to take. That's why I'm talking to more of the people that don't have to take the money out, because it's yours. Just be aware that when you ride something up for 1,000% gain, if any bad news comes to it, that 1,000% gain is going to be coming back in your face.
I mean, yeah.
And I think at some point you do need to take profit. I don't care if it's your money, if it's your mom's money, if it's your grandma's money. But I think if you bought it at $2.99, and it got to the high for this year was 489 and change, and you didn't book any kind of profit in there, I would tell you that you don't know what you're doing.
I mean, that's fair enough, but that's pretty much exactly what happened to Apple at 700.
Yeah.
Right? They get everyone's long, and then poof, it's gone.
Pull out the rug.
Yeah, I mean that's the game though.
it's market psychology, and it's irrational exuberance of crowds. If everyone's long, 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 then there's no one that's selling anymore. So there's no, if everyone's buying and they can't buy it, what's going to happen?
Yeah, but what we're doing is we're basically just highlighting the problem with the current market condition. I mean, it's not investing. People, we talked about it earlier again. People are not investing in a company. They're buying a price. And
Yeah.
I don't think people like outside of the select few who kind of do this full time for a living really understand that concept that like Baidu at we'll say 211 isn't what the company's actually worth, right? It's the price that people are willing to pay for the company. So if I were to put $1 million into this, I'm not investing $1 million because I think Baidu is worth $211. I'm investing $1 million because I think there's somebody here holding me up at 211. That worst case scenario, I'll be able to get out with minimal, like, limbs getting chopped off by significant others.
Yeah, I mean, I think that's a very important point to bring home, Greg, because and Muck, you're speaking to it too. I mean, we're talking to kind of a unique little audience here. We're not talking to mom and pop who are putting their retirement savings in here. We're talking to traders, and really, it's a view toward trading. I mean, Muck, you said something earlier. I mean, we said all three of us said some interesting things pregame, which is, I'll just give you my for instance. In my long-term portfolio, I had basically had that stripped down to nearly nothing. I mean, I had about, I don't know, I guess my low point was about 18% invested. And over the last couple of days, when we had big tanks, I started nibbling, just in terms of, I bought Alcoa, for instance. That was one of the things that I had identified that I liked. And, that's a far different strategy than what we're talking about here. Agreed, guys?
Yeah, I mean, you're talking about the difference between the uneducated public and someone who knows what they're doing. So obviously you see the opportunity and you know to jump on it, right? Like just like we talked about last week, how Amazon at 300 isn't worth it, but Amazon at 270 might be, right? We're able to make that differentiation, that separation between where the stock is right now and what we think it's worth based on the prices we see and all the information we have at hand. So I mean, again, if I had billions of dollars, I would be probably putting in hundreds of millions of dollars every 5 points on the SPY, going long, right? And I'd be doing it to the sectors that I think are going to be hot in coming weeks, months, years, whatever. I mean, that's just kind of where I'd be looking. I mean, I would literally put $1 billion.
Uh-oh. Greg, we lost you. You faded there, Greg. Could you re-say what you said?
Yeah. So basically, I was just talking about how if I had $1 billion, I would be buying probably $100 million worth of SPY every 5 points, and then I'd be looking to go long the casino names. Like this opportunity. I really you can't call it a great short. I think it's a great opportunity. It just reset so many charts and shook out so many people that didn't need to be here that I think we're going to see this as being the reason why we end up going to 250 or 300 next year, whatever the case may be.
Right.
I mean, I agree with that. I don't think at all any of this is a short. I think it's been an ultimate buying thing, and that's what I've been telling people. I've been waiting for. Uh, I do think.
Well, let's clarify that though, Muck. But you think in spots it's good to buy. It's identifying those spots beforehand and saying, hey, you know what? I'm gonna take a hit. If it shows red today or if it shows red tomorrow, I'm gonna live with it because I like the target area.
Yes, and that's how I think, and that's how I do my investing. It's not so much trading as it is investing. Um, when I look at charts, or when I get a feeling because I read an article or I saw something about a company, I will do my due diligence, and I'm not in it for the 1 point, 2 point thing. I'm in it for, how long do I think I need to hold this? How many points do I think we get out of it? Where is my max pain that I'll, reset the position? Kind of, I do that, and then I roll. I'm definitely not a scalper anymore. I'm more of a, get in, get the right price that you think, and try to make as much money as you can. But always have an exit on both ends of it.
Hey, Greg, why don't you talk a little bit about your attitude toward trading? Because I think it differs from what Muck just talked
Yeah, so Muck and I get into fights quite a little bit here offline with our differing mentalities. But I am a full-blown trader, right? I don't care what these companies are actually worth. All I really care about is what they're trading at now and obviously where they're going to be in the future. But I trade on a short time frame with a long-term view. So my watch list is set in stone. I watch something like 25 names, and that's it. So I know them really well, um, and I like it that way. But with that being said, it allows me to follow them more closely than if I had a watch list of 200, 300 names like some of these guys out there. And then,
But I think, Greg, I think that's a critical point. And I think, we may or may not, I don't know who the hell's listening to this, but I think it's very important for people to create a scenario where they can actually fucking learn something about what they're buying, rather than just listen to somebody and follow like sheep.
yeah, I mean, listen, I work obviously at Sangalucci. People refer to him as a guru, even though I don't look at him that way. I obviously know the personal side of him. But I think a lot of these gurus have gotten lucky that the market just keeps melting higher. And we saw a lot of people get embarrassed over the last week and a half. And I think it all comes down to their watch list. I mean, realistically, if you're watching a different stock every day, how well are you really going to be able to know it? You're not going to know that a 48,000 share order is incredibly abnormal. That's weird. That's not supposed to happen on a $200 stock.
I
Right?
mean, I think your points are so well taken, and people should listen to them. I mean, this is what people don't do. When you have a market that we've had over the past 6 years, where it's just really going up, going up, going up, everybody and their brother has been selling subscription services. I noticed that on Twitter, and I've been on Twitter for about 6.5, 7 years.
Yeah, I've actually started to notice it on my Twitter too, which
They're starting to fall off.
was pretty frustrating because obviously we over here we try really hard not to spam people with stuff like that, and then obviously I get hit with it. It's just kind of like why, but no, I mean listen, honestly, the average person if they had just put their money in the SPY up until last week, they probably would have been doing better than most of these gurus.
Goddamn right.
And all these guys blew up this week. I mean, listen, if I wasn't over here working on different projects that we got going on in the back end, I can probably say with a fair amount of confidence I would have blown up at least one account. But that's just how I trade personally, right? So I mean, we've talked about this last time. What was it, like a year ago when I was on the show? For a long time, my mentality was I will risk my entire account to reach, a sizable account to which that I can get leveraged out in a big way and really start putting on some sizable positions, right? But mind you, I'm 22 years old, right? So for me to lose $5,000, it's a lot of money. I understand that, but at the same time, I could always work my way back and make that money back and do it all over again. I have no family. I have no wife. The only person I have to support is myself. So I can let my risk parameters be pretty wide. Obviously, Muck and I have been working on changing that a little bit, but it really all comes down to you personally. I mean, the names that I have are all really volatile names. with the exception of maybe Bank of America. But lately, if you were to look at that, that's been a crapshoot too. So,
Absolutely.
so I know what I'm looking for. I know how I want to trade, and at the end of the day, I know what my objective is. I'm here for quicker moves, whether it's a day trade or a weekly swing. After that, anything longer than that, I kind of just roll into like a 2-3 month position, and that's investing for me. Three
Right.
months is investing to me.
Well, I think it's critical to point these things out because so many people, when the market is continuing in one direction and one direction only, fucking trading and investing is easy. You just, yesterday's account is worth more today. And it's not always like that. And we may be getting close, and I don't know. We talked a little about QE before we got on here. But whether we get to a market where it's based on fundamentals or whether we're looking at a market where we have 4 or 5 years of relatively flat performance, then it's going to be important to be a stock picker's market. But I think the parameters that you raised, Greg, and the honesty that you've shared with us is critically important, and people need to think about what type of investor they are, and not the guy that has the biggest swing and lean.
Well, I mean, the problem that I have with quote unquote investing, and by this I mean like long term, a year or whatever, is what I think people don't realize is the market around your stock changes every 3 months when they report earnings, right? So you could be walking into a stock that looks fantastic in January, and then come its earnings report 3 months later, it's completely different, and now you want to jump ship. But if you're in there for the long haul, the 1 year play or whatever, the name that you bought in January is no longer what you're in. You're in what you have now. You see?
I agree. I think the points you're raising are very important for people to think about. I mean, you got to think about. I think a lot of these people have just blindly done this. This has become like the stock market and writing, saying I have a trading thing and da 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 da. It's kind of become the real estate market of current times, and you've got to be cautious, people. You got to be awake. Go in with your eyes open.
I mean, if I'd be willing to venture a guess that if we were to pull up the numbers behind it, you would see more growth in subscriptions to trading platforms over the last year and a half than probably all of, I don't know, let's say 2010 to 2012. Trading's in vogue again. Everybody wants to be a trader now.
Right.
Even if that means just dumping money in the name and holding on for the ride.
Yeah.
Whether it goes north, south, or gets delisted, whatever the case may be.
Hey, Greg, you raised an interesting point. Before we get back to Muck, I mean, is there any books that you would point to that you think are great? I mean, I really think that people need to spend a little bit of time educating themselves. I had a day trader, or a guy that just started in the market. I don't even know how long he's been in, but less than 6 months, I gather. And he was sitting there talking about things, post-cash flows yesterday, talking about the move in the U.S. Japanese yen. And I'm like, dude, man, take some fucking time off. Go read a book. Learn something.
Yeah, so I mean, don't do me a favor. Don't tell anybody this because I don't like to admit it, but I read quite a bit. I actually started like 3 years ago, and right before bed, I'll read for like an hour or something. But usually it's weird stock market stuff. It's like Benoit Mandelbrot, so fractals and scaling and all that. All that stuff I really think is pretty interesting because I kind of have a different view of how I think the markets work. I don't think any of this is actually random. But that's a whole nother conversation that I don't really want to get into today.
Well,
Yeah, we can argue random walk in another day, Greg.
Yeah, well, all right, listen, we're not doing this right now, Muck, okay? Because I'm already hot to trot, so we can't. But
hey, Muck, anything you wanted? Anything we want to hit on before we leave here, guys, and end this?
No, I would agree with with Greg. I think it's I do think it's funny how, man, what was it? When BTFD was running strong and we had a lot of hosts and stuff of that, financial Twitter was, really going on, and then it just died,
Yeah, what happened?
died a fast death, and now it's coming back, but it's coming back with people wanting to get paid for, what kind of services they provide and stuff like that. And I think if you're really truly good at what you do, you really shouldn't care that if people are paying you money, you should. I mean, if your ideas are good enough, if you're making enough money on your own ideas, why do you care if someone's giving you $10 a month or whatever? That's my thing about subscriptions. I think subscription services almost become like the new hedge fund services, where it's not about making the 20%, it's about making that 2%
Yeah,
on your fee more than showing how good you are. That's
I got to tell you, I've seen so many people come through this business over even the last 10 years, and people that who knows where the hell they are. I guess they're probably hauling somebody's trash.
It's a hedge on themselves.
Yeah,
That's all it is. They're self-hedging.
well said.
So they trade against themselves. When they actually trade, they really probably don't use as much size as they say they do. And that's fine. Listen, I have no problem with it. If they want to hustle and try and make a buck that way, then so be it. But the reality is I think we're seeing left and right these guys are starting to blow up.
Yep.
I mean, I've noticed, I don't follow any of them, but I've noticed quite a few guys that I know about that I kind of try and keep tabs on just to kind of see what crap they're putting out. Haven't been active over the last week.
You are precisely correct. I mean,
So if you can only buy things and go long them, what do you really know, right? And then on obviously the converse of that would be, why are people paying you for your alerts if you can't really actually trade? But I mean, me personally, I don't like the alerts. I've never liked the alerts. I think that brings a much shadier side to the market, simply because if my name is John Doe and I have 12,000 shares of Apple and I have a mailing list of a couple million people for free that's run under somebody's name, Mike Jones, it's pretty easy for me to put out an alert on Apple and see my 12,000 shares, kind of go up in price drastically.
I mean, as people who follow me on Twitter know, I do bet sports games.
Yeah.
And I have to tell you, I've seen those services just the same way pop up and fall away. Guys, don't spend your money on that. There's free information. Go to the library, for Christ's sake. Get a book, learn something, read something, and don't sit there and just blindly follow somebody's bullshit, because they probably haven't been around that fucking long.
Yeah, I mean,
if you want to talk about,
or ask for their CVs. I mean, get their trade reports. They'll make you sign an NDA so you don't tell anybody, but take a look at that. I mean, if they're legitimate, they should be willing to show you that much.
Well said. Well said, Greg. Sorry, Muck.
and for books, it's not a trading book, but I think it's probably one of the best books you can read about really how the game that you want to get into works. It happened a long time ago. It was written in the 90s. But read the book Ugly Americans. And that is, it's not about the US, it's not about the US stock market. It's about the Asian stock markets. But I mean, it has some cool stories in it, a lot of stuff that's not really relevant to trading, but if you read that book and you read how he viewed trading world and how he viewed the kind of trades that he put on, you'll start to really understand what the markets are about, and it will give you a better insight on how to make money in the market. That's my opinion. Take it what it's worth. But a wise man told me to read that book, and I read it, and I told the young me over there to read the book, and he read it, and he loves it. So, And can I say how cool this is? It's like the 21-year-old me over there. You know, you
Except
can't.
better looking, better at trading.
All right,
You
shut
can't.
up, you guys. All right,
You,
hey
you can't
guys.
see it. And wait, but then there's me now, and then there's the crotchety old me that's going to be later on. So
Oh,
I can see my life in one thing. This is really nice. I like it.
you're a tired old bastard. Anyway, thanks guys for joining us. Greg, Muck, really appreciate it. Guys, some good thoughts. Again, be cautious out there. Things have bounced back. They're bouncing all over the place. We were almost flat. Now we're slightly down. I tell you, take a look at Greg's plays. I think they're very captivating, and hopefully you guys enjoyed it. We'll be around next week. Who knows? Whenever Muck gets out of bed, guys, be well, be safe, be smart. You don't have to play every freaking moment. Bye.
Thanks, guys.